All right, we're back again, team. Another edition of After Hours. Maddie, we had a big week last week. Bitcoin creating a new all-time high. Today's March 11th, and on last week, March 5th, we saw a new high in Bitcoin, and we weren't here to talk about it with you guys, but if you're in the Discord, if you're in our platform, we were talking about it all last week. So Maddie, how are you feeling right now? Bitcoin's at $72,000 now. How are you feeling about this?
I'm feeling good about it. Obviously, when Bitcoin makes a new all-time high, that's a pretty good signal that altcoins at some point here are going to make significant catch-up moves. We actually have already started to see some of that behavior across the board. And I love to see it. I also love that we've broken this nonsense pattern of the 4-year cycle and everyone telling us that, a new all-time high is made, within this much of time exactly of the halving, right? But we've now learned that, it's not so much about the supply narrative, although, the halving does take more supply out of, total circulation, or the amount that comes into total circulation over time. It's not the end-all be-all factor that determines a new all-time high for Bitcoin, right? Kind of similar to how previously in the last cycle, and everyone goes, well, Bitcoin never ever goes below its previous all-time high, so it's never going to do that, right? Destroyed by like a full $5,000, right? And that theory is no longer here with us. So what I'm hoping from this is that we can now just start looking at crypto through the lens of economic expansion, economic retraction, and just seeing that cycle move forward. So happy to be here, happy that we're making new all-time highs for Bitcoin, and very excited for the altcoin market in these coming months.
I'm very excited to get into the show, team. Make sure you tap in with Crypto Charge, our platform. And, we got Ask Maddie show coming out 2:30 p.m. Pacific. So if you have any questions, leave them down in the comment section down below. But in today's show, I really want to lock in. I wanted to do this last week, but kind of lock in from a macro standpoint with Bitcoin, which affects our altcoins here. And a little bit celebratory with you guys, but I really wanted to talk Bitcoin and talk shop with you guys just for a second, because since last week, we see Bitcoin up 17%, and Ethereum's playing catch up right now. Maddie's been very critical of Ethereum just because, it's like it's the number 2 altcoin, or it's the number 1 altcoin, but it's the second one behind Bitcoin, and an asset that people look to invest in besides Bitcoin. You'll hear Bitcoin maxis say, oh, I'm only investing in Bitcoin. And then, sometime down the line, they're like, oh, I'll invest in Ethereum. And then, they'll end up being, they call us shit coiners, or people that invest in altcoins. And then they say the cycle goes back and they end up being Bitcoin maxis again. But if you are an investor, you see the opportunities that we see with altcoins. And I just wanted to lay this out for you because I just said Ethereum is playing catch up. And I wanted to talk about like what we saw within this last bear market. So if you take the absolute bottom of the bear market, Bitcoin is up over 360%. That's pretty good on Bitcoin. But compare that with ETH, Ethereum is up 345%. So you can kind of see similarities there. But there's a little caveat there. A lot of opportunities to buy Bitcoin. But with Ethereum, to get that 345%, you had one day. You had one day of opportunity in June of 2022 to get that 345%. So, Maddie, if you, team, if you follow the consistent investor strategy that Maddie laid out, eons ago, it feels like now, Maddie talks about strategically entering the crypto market, either using, depending on what market conditions we are in, using dollar cost averaging or limit-based ordering. So, like for me, like once we saw that 20K Bitcoin and entering, our team was telling the rest of our, not giving advice, but saying, hey, this is what we're doing. We're going to start buying Bitcoin at these prices. The DCA, we weren't really looking for limit orders. We were DCAing on the way down, and that offers, a 360 return. But if you were DCAing into Ethereum, like we were, telling you to do with Bitcoin, you would only have a 180 to 290% return right now, which is very similar to my H-bar. It's way less than my API 3. So, Maddie, give me your thoughts right now. Ethereum's lagging behind. What are we expecting out of Ethereum here?
Yeah, Ethereum is another great example, like I talked about, of kind of that pattern breaker that we've talked about previously, where, we've had the chart that everyone whips out. And, especially at the beginning, this chart definitely changes a lot, because when people start talking about the flow of Bitcoin, ETH, large, mid, small, and then meme coins, right? Talking about that cycle flowing. you had a much smaller market at the time, right? You have way less coins on the board. So now what we've seen is a deviation from that. So we've seen Bitcoin do what it always has, right? In relation to at least going first, seeing dominance pick up, right? That's very standard behavior. Bitcoin dominance picking up, Bitcoin moving, ahead of a lot of other altcoins. However, we did see many altcoins outpace Bitcoin in relations to percentage gain. Looking at Engine, looking at Render, looking at Solana, looking at a variety of other coins. Right, there was still plenty of assets that did really, really well in that capacity. And I think that Ethereum does make a new all-time high. We did a pretty extensive show, I want to say it was last week, on Ethereum, and kind of just comparing Ethereum's current upside, even at like a $38,000 Ethereum, and then comparing that to a variety of altcoin picks that we have here, and it just doesn't measure up. I think people get very, very blinded by that number on the screen, and they think that they're important, or that they're making better money if it's a 4 or 5 or 6 figure coin, but it really doesn't matter. When I look at Ethereum's performance, we really didn't start picking up the majority of this last impulse for the last 30, 45, 50 days here, right? That's really when Ethereum started picking up, and it's interesting to me also because I saw on Twitter, and I've even had some other people speculate to me that, hey, if your coins haven't done this by this time, you should probably just dump them because you're missing out on opportunity. Yeah, you can potentially miss out on some opportunity, but you also look at the same people who tell you to buy Bitcoin and ETH because they're the guaranteed winners, and then you have all these other coins that are running ahead of ETH. I don't think that any of these people who have been here 5, 6, 7, 8 years have any intention of selling their ETH because it didn't make that move sooner, right? So I just hope that you guys are taking some of these parlor tricks, I would call them, or just heavy speculation on these timelines and stuff about what needs to happen and what order at what time, right? If we always knew that this was going to happen in a specific order on a certain timeline based on certain things, we would all be rich, right? We would all be selling the top, we would all be buying the bottom, but it doesn't work that way, right? So you guys just need to be objective, identify projects that you really, really like, accumulate them in a bear market, switch to limit-based ordering in a bull market, and then sell at 1, 2, 3, 4, 5 targets, right? That's the way you go about it. I don't have FOMO. I don't compare my portfolio to anyone else's. This is a me versus me game. I don't really care.
I like that, Maddie. And before we get into some of the news we have for today and some of the talking heads that we need to address, Maddie, today we've seen crazy gains on, well, not crazy, but we've seen gains on XRP, which is like our preferred asset of choice. So last 14 days we've seen Bitcoin do its move about 40% last 14 days. But like you said, we saw the other meme coins pick up, doing that tremendous moves. Gambling, we take a gambling approach to those cryptos. But now today we're seeing XRP, XLM. Let me just, I've been, you guys are going to call me like a hypocrite here because I've always been like, hey, if you go on CoinMarketCap to look at charts, you're stupid, I would say. You're not going to TradingView, you're not whipping out tools to do an actual technical analysis. But I'm not doing a technical analysis here. I just wanted to demonstrate to you guys what are we seeing moving today? So in the last 24 hours, actually right before we started, it was XRP at the top here, but we've seen major moves from Litecoin. Let me zoom in a little bit here. XRP was at the top, and now it's, chasing Litecoin. But also too, Maddie, look at this. Algorand, XLM, IOTA, these payment plays are moving today. So you do see these cryptos kind of move all together at certain times. Bitcoin taking the lead, meme coins catching up, and then you see our altcoins, some of our payment plays catching up today. Was that fair to say?
Yeah, I'd say we saw a catch-up move, and one of the big reasons why some of you guys are like, well, why don't you hold XLM and XRP? When you look at how these moves have followed, it's been a mirror, right? Like it's been slightly less today on XLM, but even during the lawsuit win, announcement, and SEC v Ripple, at least in the relations to the part that we care about as investors, with XRP in itself being declared a non-security, right? The individual lawsuits against Brad Garlinghouse and Chris Larson really don't affect us as XRP holders, right? I mean, I hope that they win that and they deserve to win it, but it doesn't impact us in any capacity. I digress though. You saw a almost 1-for-1 move on the XLM chart and the XRP chart. Why? Because they do almost the exact same thing. Jed McCaleb helped build both the XRP ledger and Stellar Lumens, right? So we have a lot of, unity behind that. We have a lot of similarities there. And we do see this, as well with DEXs, right? We saw Sushi and Uni running very, very closely together. Now, I think Sushi still has a pretty big makeup move to make here, but we generally see sectors move together, right? So I don't think that meme coins are immune to that or sit in their own spotlight. I think that we can see a lot of these industries kind of get these big swell moves. So I wouldn't be surprised if we see other payments pick up. We also saw kind of Algorand, showing some nice colors as of recent here. It's not one of the biggest biggest holdings, but it is a holding. In fact, I did a little bit of like a retrace play chart for my team in December, because I know some people have just got in the market. Ideally, what's the best time to plant a tree? 10 years ago, second time, best time, right? It's today. So the market obviously popped off in October. December, people started pouring in. So I did a quick little chart showing kind of, hey, here's some assets to get into. Here's current market price. Here's kind of maybe 1, 2, 3 short-term plays we can look at here, right? And like pretty much all of those, except for a couple of them, which are basically at the price that we talked about them in December, are significantly up, including Algorand right now. So I think we're going to see a lot of payment plays pick up. I think we're going to see a lot of altcoins that people have dismissed, forgotten about, or probably not even heard about in over a year and a half, 2 years, really start to take the limelight, right? Because I think that people start to put them in the box in this narrative of, well, again, like it didn't do it during this time period, so this is no longer a good coin, or this coin is from an older cycle, so it's no longer a good coin now, right? We don't even have enough market data to say something like that, right? We have such a young crypto market. Imagine if we took the same analysis to the stock market. It doesn't make any sense. So I'm very excited for it. I love to see the payment plays picking up here, and I think we'll probably could see that trend continue.
I love that, Maddie. Team, I won't pull up CoinMarketCap again. It was just for that purpose. I just wanted to show you guys how all the altcoins are kind of doing right now, and why we've seen, those payment plays kind of all moving together right now. Because Maddie, that is true. We all see them move together, and that's why that was a big moment deep in the bear market. You were pitching like your altcoins, looking ways to trim down, looking ways to look at different sectors within crypto. And, I wasn't buying XLM, but I was, earning that XLM within Coinbase. It was like 4% early on in the bear market, and so I would just, then from that point, I was just being like, okay, I'm betting on the same play here, not exactly 1-to-1, but very similar. Why don't I just move that over to XRP, which is, I have a great average on, and not try to spoil my own party here with all these extra altcoins that are going to probably be doing the same exact moves here. So I think that was some good wisdom there. Team, we're going to have a lot to talk about right now, but we're going to jump this off. I was telling Maddie last Friday, I'm like, dude, I have to get your reaction to this video, because Dave Ramsey is a big leader when it comes to finance, when it comes to people managing their debt. He has a big show, and a clip popped up on my TikTok, and I watched it, and it was immediate save. I'm like, oh, we're pulling this up on After Hours next week. And Maddie, I want to get your thoughts on this. This is probably going to echo in your ear, so just tell me if it does afterwards, if I forget here. But I want to get your genuine reaction. It's only a minute 20. If we can get all the way through, that's fine. Or if you need to jump in, let me know. But I think this is pretty interesting because, team, Dave Ramsey is a person that a lot of you guys go to for macro commentary, a lot of like, hey, should I buy a house right now type questions. And this is really a leader, and I just want to show you a leader like he is, what he's saying about Bitcoin, digital assets. This is actually his associate here talking right now, so I can't say it's directly coming from the horse's mouth here, but it's coming from his show, so he would probably back a statement like this. I think he's off to the side here. So Maddie, give me your thoughts on this. Let's do it right now.
When will Dave Ramsey and Ramsey Solutions admit they were wrong on Bitcoin? I don't think this is a right or wrong thing, and our stance on crypto and Bitcoin has not changed, and it's not out of sheer grit. It's that we were never angry at Bitcoin. The problem is people cashed out their retirement accounts betting on a coin. And if you ask anyone who actually knows about cryptocurrency, they'll tell you, oh, it's not an investment. It's speculation. This is speculating. This is betting. It's not that dissimilar to gambling in Vegas. Do people make money gambling? Sure, some do, and they brag about it. And there's a lot of people who get hurt, who get burnt, and those are the people I'm most concerned about. And right now, I just checked where things are at with Bitcoin. It's back at, some near all-time high levels at about $61,000 a coin. 5 months ago,
right here.
It was at $25,000. And so you can see the volatility of something like that worries me, because most people doing this are young men who are not investing in retirement. They're not investing into things that have a proven track record. Instead, they're putting all of their eggs in one basket. And we've always railed against single stocks for the same reason. It's too risky to put all of your money into one thing. If you're out of debt, you have an emergency fund, you're already investing 15%. If that's what you want to do with extra money, bless you. And if you do well with it, we'll cheer you on and be happy for you. But I can't in good faith go on air and tell people, hey guys, put your money into Bitcoin, and then it drops in value by half.
Go ahead.
Bless you. God bless you.
Yeah.
First of all, these guys are not my favorite in any capacity. First of all, Dave Ramsey, by the way, is not a financial advisor, even though he gives lots of financial advice. We got a little echo here, Gav.
My bad. There you go.
No worries. But so, when you look at some of the stuff that Dave Ramsey talks about, I don't think that everything he says is unreasonable, right? And again, this is an associate, but they're here on the podcast together, doing the show together. Talking about not leaving high balances on credit cards, right? That's solid advice. You guys should not be letting credit cards work against you and paying 29.99% on your Whataburger, right? Trying to get the best use you can out of your vehicles, right? I'm not telling you guys to drive your shitbox until it's completely broken, even though that's what I did recently. But some of you guys have to drive 80 miles to and from work, and that's not a reasonable way to go about your life. So I don't think that Dave Ramsey has like this grasp on the reality of where Americans are at as a whole. Now, in relation to specifically what we just talked about here, right? What he's talking about is volatility. And he's saying that people shouldn't invest in Bitcoin because the volatility is intense and that volatility equals gambling. And that's not true at all, right? When you look at how crypto moves, it moves like a risk-on asset. And this is what I've talked about for years. Everyone's calling for the great decoupling of when crypto starts to move on its own and separate from the stock market. I don't think we're going to have that situation. Generally, what we see is risk-on assets move in the behaviors that are associated with how the Federal Reserve is approaching interest rates, how inflation is behaving, how we see a variety of other economic factors that impact the way that crypto moves as a whole. So when you look at, it's going to lose half of its value, right? You saw the stock market have an enormous nosedive during COVID, right? And that included all stocks. It didn't matter how diversified you were, unless you were in cash, right? Parked in a little savings account. Everyone got their teeth kicked in 2020, right? Nobody was safe. So I don't think that it's a fair comparison. And, it's really the volatility that provides the most opportunity. When you get very, very small pullbacks, you really have a very small window and a very small amount of money that you can make up to that next leg. When you get bigger pullbacks like you get in the tech industry, which is what this is, guys, you guys are investing in the tech industry, right? You look at individual stocks that are within the tech sector, like Nvidia's, like AMD's. Yeah, they've been up really, really aggressively this year, but they also have pretty gnarly pullbacks. Most of you guys, especially with the people he's talking about here, right? The average crypto investor is under 35. That's the average age of a crypto investor. What does that mean? That you have a much bigger risk appetite than someone who's in their 70s or 80s, right? You have more opportunities to let this volatility subside over time. So yeah, maybe if you're 65, 70, 80 years old and, you're looking to shift your entire, investment portfolio into crypto and you need to be depending on that money in the next couple of years, yeah, that's probably not the right move. But to say the blanket statement of volatility equals gambling is absolute nonsense. It's the volatility that gives us the opportunity to make more money, right? That's why we talk about recompounding, selling some, rebuying back, keeping a portion of that portfolio to build long term, right? So yeah, if you're going to be that flash in the pan guy and you guys just want to be those people that come at the last third or the last 2/3 of every bull market and then you're really frustrated with how the market works, yeah, of course you're forever going to be frustrated if you want to participate in this much of the market. But if you're willing to research, understand what you're invested in, right? Because I guarantee you, if I got into it with this guy and just asked him the basics of, can you explain what proof of work is? Can you explain what Bitcoin is? Can you explain what Bitcoin mining is? He could not answer any of those questions. So he's not really qualified to even speculate on, is this a worthy investment or not, right? And really, at the end of the day, what you're going to see is by the time the older generation really starts to accept this, right? It's all going to be ETF-based, basket-based, ETFs. We saw Uphold actually do an example of this where they like bundle assets together and it kind of just buys them all at current market price for you. We're probably going to have a lot of the volatility subsided, which also means most of the bigger money-making opportunities have gone away. Now, I think there's always going to be money to be made in crypto, but these 100Xs, 200Xs you guys are seeing, sometimes in single cycles will probably subside over time. Now, it doesn't mean you can't still get nice 2, 3, 5Xs. But again, the goal is to recompound over time. So again, volatility does not equal gambling. In fact, it is the driving force of what makes crypto so attractive.
I like that, Manny. I just want to touch on something because, I've been doing my due diligence and kind of reflecting on COVID and what that meant to everyone because there's a lot of conspiracy theories out there. And I want to look at all of them because, I was like post-COVID, we were like doing our crypto charge stuff. And we were, reflecting on that time because we did see, a lot of crashes in crypto, a huge crash in the stock market. But I was listening to someone the other day and he was just talking about like there was like 5 or 6 stocks that went absolutely ballistic during that time. And when you talk about that, they're like Moderna, Nvidia, Enfis Energy, Etsy. So all these companies really capitalizing on, the pandemic and being able to, have their stock go absolutely crazy during that
Right.
time. And that was just like one of those. But if you're investing in, the other stocks that Maddie was talking about, you didn't. You obviously had a stressful year, as well as a lot of us. Even though Bitcoin and cryptocurrencies, you could have made a lot of money in those assets. But within the stock market, there was like this weird little like four to six assets that just said, forget about you guys. We're going to do what we're going to do because of the pandemic. We're going to be able to capitalize on what's going on right now. So I did want to bring that up because it was interesting. I was listening to that the other day, Maddie. I was like, that's really interesting. Just looking at big companies, Amazon gathering a lot of transactions, or a lot of people using their platform during the pandemic, and then where it really hurt was small businesses. So that was like one of those. I was like, oh, that's very interesting. That looks scary, but I did want to bring that up right there. Next thing I want to talk about, and this is in relation to, I was doing my research for the show, trying to gather as much what's going out there in crypto right now. And I was just talking about Maddie. I'm like, Maddie, you're never going to believe this. Like, these people are so stupid on the internet. Like, these people will fall for anything, and people will repost whatever. These people will repost whatever they see that they like. And you've talked a lot about this on the live show. You talked about, hey, be skeptical of emails, be skeptical of weird texts, weird people getting into your DMs, and this is just directly in feed. This guy Pierre with the check mark had to post this up, and this was a little bit weird because I've never seen a document from the US government that looks like this, Maddie. It's got the Bitcoin logo, it's got the White House logo, and I saw this, I'm like, this doesn't even match up. What is this grid even, what is this even pointing out here? And you dropped your little chart right here, and you saw a lot. Look at these interactions over here, 500 retweets, 2,500 likes. So I was like, okay, this would be cool to bring up on the show, but is this even real? And so I do my due diligence and look what I'm looking at right now, Maddie. This is fraud. This is fake. This is so fake. And look, you go back over here and people are reposting it. Bitcoiner only. And then this other one, Coin World News, reposted the topic of this whole, didn't repost a chart, but reposted the topic of what this was talking about. Maddie, there is so much scam out there. And what the point I want to drive home is, team, you really need to be in a community. I had people this last weekend, Maddie, I'll let you get your XRP topic off right here, but I had people this last week, they were having ledger problems. They couldn't know. Come to find out, it was just a cord, and so all these issues arise in bull run territory, and so you really need to be tapped in with a community like we have that many don't. You need to be tapped in with ours so that you can bring these. It's like, hey, is this even real? I got one this morning. It was like, hey, I got this thing from Ledger, and come to find out, just look at the email. Is this even real? No, it's not. So Maddie, you were telling me something about before the show about XRP. Do you want to share that with the team here?
In relations to the tweet that we were looking at previously, or?
Oh yeah, well this is just scam. Yeah, you could talk about that. But I wanted you to talk about, you're telling me something about like, is it a good time to buy XRP? Actually,
right.
That might have no relation to it. I don't know why I correlated with those two, but I don't know. Give your thoughts here on scams and what the team can be doing to mitigate these scams and not fall into this big trap that seems to happen with every newcomer within crypto.
I would say that some of the false news that comes out during a bull market is almost more detrimental than the FUD that comes out during a bear market, right? You've already beat down the average retail investor. They walked away 12 months ago. They're not here anymore. A lot of you guys who are here right now will not be here next cycle, and that's not because I don't want you to be here. You just won't, because you don't have the attention span for it. You don't have the desire for it, and you're here for quick money, not for generational wealth. So when you see a lot of these guys start posting all these hopium, those are the accounts that get the most traction. They get the most interaction because people want to feel good, right? When I very, very first started getting into crypto, I fell into a couple channels that I thought were really good, like XRP resources, but they turned out to just be like almost XRP maxis, and they'll post anything and retweet anything just to get the attention. And it's going to happen by this date and this time, and this is the catalyst that's going to get it there, right? You guys just have to be really, really careful out there. Understand that no one's coming to flip the magic switch for you. There's no special date. Nobody has a crystal ball, right? And if they did, they wouldn't be sharing it with you. Okay. They wouldn't be sharing it with all you retail investors if someone really knew. If I knew 100% without a doubt what XRP would be at what price by what date. I wouldn't be telling any of you guys about this. I would be borrowing a bunch of money. I would already be living in a bunker somewhere until this whole bull market was over, and I'd be doing this by myself. I want to be sharing it with you guys, right? So understand, if these guys are selling you now $9.95, I'll tell you guys when it's all going to happen, right? It's absolute nonsense. Just be careful. You can always double check stuff, especially government docs, guys. That's always highly available on government websites for download. All those PDFs are by law required to be, publicly accessible. So you guys, like Gavin just did, go check that article out, see if it matches up. Don't just retweet, right? Do your part in cleaning up some of the nonsense out there by doing your research and just saving that retweet and being one less person that puts out misinformation. There's been a couple times where I have misspoken or transposed words in videos. I have taken responsibility by taking those videos down and then also issuing statements of, hey, I accidentally spread some information. Here's what happened, and here's the clarification. We as educators in the space have the responsibility to do that. And if you don't, you're not an educator anymore. You're not a researcher anymore. You are nothing more than an influencer. So let's do better, guys. Let's make sure that we're keeping the space as clean as possible, especially with all the bullshit out there.
Yeah, it's like you got to question everything you see on the internet now. You got to do like a deep dive on just like a regular one sentence tweet now just to see if it's real. And it's stupid that it's come to this. And what I was talking about with XRP earlier, it was the hopium you were sharing with me earlier, with people coming back into the crypto charge community, jumping in the Discord. Hey, what are we doing with XRP? It's like, where were you this whole bear market? I thought that was, you shared with me that. But it's the hopium, Maddie, the hopium of getting into the asset now because now, it had a great day, right?
Right. It all of a sudden becomes crystal clear. And this is what I've talked about through the last even year of us being here on YouTube and, prior to having After Hours and on Ask Maddie show, talking about, nobody is singing Kumbaya and biting the bottom together, right? It doesn't happen. Everyone's going to tell you it's going lower. Everyone's going to tell you that your entire asset is garbage, and that you don't know what you're talking about, right? But then as soon as we're even up just, let's say, like 1 or 2 X's off the lows there, right? It becomes very, very overt. I think a lot of people are going to eat their words on Zcash and Casper specifically as we start to get some more impulses here. And again, the community, quote unquote, is magically there, and the clarity and confidence follows.
Yeah, valid, Maddie. Okay, so now we're gonna go to what you had to say this morning. You commented under this guy. I thought it was hilarious because I think he's selling a course or something, and he gave us his XRP take. So I feel like everyone sees a chart and a couple sentences on Twitter, and then they think it's real. And then you get people like Maddie here debunking them live, IRL, or on X, in real time. So Maddie, talk about what you saw from this guy this morning, because I really want to, dampen the XRP hopium. I don't want to be so crazy with this guy, or this guy was actually a bear. So give us your take here on what this guy really had to say here, because he was saying XRP does not belong in your crypto portfolio.
Yeah, guys, 2 things to stay away from that'll ruin your lives, maximalism and fentanyl. And I think this guy did a little bit of both. First of all, I don't think you're correct here at all, even with this percentage here. So he says in the second paragraph, he's talking about XRP. Last cycle it managed 500%, is now at risk of breaking the SEC lawsuit low, just 30% away. So if we're talking about the 2020 low, right, that came in in the, I think, 11 to 14 cent region, it just depends on what chart you're looking at, to the high up at just under $2, buddy, that's a little bit more than a 500% gain, right? That's like a 15, 16x there. So absolutely wrong. So let's go ahead and correct that. You have time to correct that still. I'm not sure if we were talking about maybe potentially another point here, but that's definitely not correct. XRP must do a 2,600% to break even against Bitcoin's value from the 2017 peak. Why are we even measuring it like this? Why does it matter? Are you guys cashing out in Bitcoin? Are you guys cashing anything out in Bitcoin? I'm not. I would never do that, even if I was a Bitcoin bull, right? The whole point of buying and selling is to buy an asset and sell it for a higher price than you paid for it previously, so that you can either buy other things at a lower price or buy the same things at a lower price in the future, right? So I don't really care about where we are in relations to the previous Bitcoin peak versus XRP peak, right? It all comes down to where did you buy that particular asset and where are you selling it at, right? If you guys bought XRP at the 2020 lows during the whole lawsuit, during the whole COVID thing, you guys are chilling pretty nicely on your XRP right now, right? If we were to actually measure that out, right? If we were to go from the 2020 low, yeah, bro, let's get on these charts because again, so first of all, let's go ahead and just clarify something here. So here's the 2020 low on the, let's see what chart we're on here just so I can clarify. We're on XRP, boom, okay, cool. So here's the 2020 low, 11 cents, 11.1 cents. There's the 2021 peak, That's a 1,700% move, brother. So let's go ahead and edit that tweet. I hope you paid for premium because you can't edit it otherwise. I have to just take the whole thing down. So 1,700% from the lows there, right? If you were to look from those lows to where current market price is, right? XRP is up 572%, right? So we are already up almost 6x from the 2020 lows. If you look at from current or from the 2022 low, if we're going to call this the cycle low, right? The Bitcoin low, we're up 152%. So doesn't matter which low you chop this from, right? XRP has outpaced big time. If you zoom out even more here, and let's go from the previous cycle high. So we'll call it the 2013 high to current market price, right? You'd be up about 11 or 12x currently on your XRP position, right? So again, when you look at everything that XRP has had faced with the SEC lawsuit intact, being delisted from every single US exchange for years with a hard S at the end. This is miraculous market structure, right? And I think it even with, again, one of the things to consider is from the low that was set here in 2020 to that high that was established for 17, almost 1,800% move here, that was with the lawsuit intact, right? So now that we're in this big bullish period here, and again, we're up, 20-something% on the day here. We're trading at 73 cents when we were trading at just 30 cents back here in 2022. I'm very, very bullish here. I think that this is phenomenal. I think when we also look at the previous support level that's been flipped in here, you guys can see that the major support of 55 cents, has been flipped. You guys can see that we had the big break. Pull down, second little retrace came in here, reestablishing a higher low. That's what this is, guys. This is a giant higher low that was established, but in an ascending trend line here, this is a ticking time bomb. And I think a lot of people are going to be very surprised because this entire time, everyone's saying, you should have bought this, you should have bought that. I don't care what you think I should have bought. I know what I bought and I know what I'm holding. And that's the difference between me and a lot of other investors out there is they don't know what they hold. They couldn't even tell you how the mechanism of, how consensus is achieved works. And they're going to tell me that I'm making bad choices within cryptocurrency. I'm not here for today. I'm building a portfolio for my future, right? And XRP is going to be a big part of that. So you're looking at XRP at 73 cents now. This is going to be a drop in the bucket 10 years from now. When we're trading at potentially hundreds or thousands of dollars for XRP. So again, I think that it's important that, we always, again, do our own research, look at the charts for ourselves. Let's at least just double check the facts, right? There's some glaring mistakes in here. Talking only a 500% increase from that 2020 low. And I think that overall, we have a great fundamental case for XRP moving forward. You have Ripple at a higher adoption rate than ever before, quarter after quarter crushing it, seeing great advancement and improvements to the XRP ledger over the last 2 years. I had the pleasure of the XRP Ledger Developer Summit a couple years ago. My God, there are some amazing, intelligent people working on these projects, and I'm very excited about it. So, I'm not going to stand here anymore and talk about XRP. If you guys want to hear me write some more love letters, cryptocharge.com, we do that. But, when you guys look at this, tell me it's not bullish. Tell me this isn't a beautiful thing that still is offering great opportunity.
Matty, this is a good transition because we got to talk about our father, Brad Garlinghouse. He laid down a beautiful tweet here. I will read it out for the team here. I want you to give your take, and then I want you to give everybody their big red pill when it comes to the charts, when it comes to this macro Bitcoin chart that I've talked about in previous times, the magical chart that red pilled me about Fibonacci's, that brought me in with technical analysis to kind of bring it all the way home. And what Brad talks about here is kind of about multi-cycles within Bitcoin. And then we're going to have our boy here, Matty, get into that. But talk about Brad Garlinghouse here. He laid this tweet down earlier today. He says, Bitcoin ETF volumes have been soaring. We are due for a halving, and the broader crypto market is following Bitcoin's lead, as has historically been the case. As someone who has experienced multiple cycles of crypto is back, it's imperative this bullishness go hand in hand with real-world utility. That's the real and inevitable march of progress. Matty, what is your thoughts on this?
I think it's a beautiful sentiment. And I'm really not just a fan of Brad just because he's, Ripple CEO and a spokesperson for an asset I care a lot about. I really think that he has a good head on his shoulders. I truly believe he means the things that he says. And I do believe that we need to see real world adoption at some point start to sync up with these big, bullish increases in price. That's really the thing that I think a lot of you guys don't consider. And that's why a lot of you guys only think about each independent cycle and you don't care about other cycles beyond it, is because you think that we're always going to have minus 90, minus 98% crashes. You think that we're always going to have this intense volatility and there's always going to be an opportunity to buy everything back at a lower price. But eventually that won't be the case, right? We'll have less and less volatility. You'll have more steady growth over time. And when you have payments coming in like this, right? Payment solutions, they tend to do very, very well. Previously, when you look at, Visa and MasterCard stock, you generally would do better just holding either of those individually than holding the S&P 500 as a whole, right? Now, I'm not saying that, if you hold XRP, it's the guaranteed payment winner forever and ever. But when you have a company that has been around for as long as Ripple has and has been as resilient as they had and have continued to double down on the technology that they want to build their framework on top of, it's hard not to see that long-term adoption. So when people say, I recently did a video on TikTok and YouTube, TikTok and Instagram, talking about, will crypto crash again? And the answer was yes, right? We talked about that on the show where we said, of course, we're going to have more crashes in crypto. And people automatically translate that with, well, you're not a crypto bull, or you're not in the asset class and you're bearish, or you're sidelined with cash and that's why you're talking this way. That's not the reality. I am forever a fundamental bull on cryptocurrency. That never changes for me. I understand this technology intimately. And I think that's where a lot of you guys need to up your game, is your fundamental understanding of what you're investing in. And then you also realize you don't have to be involved and or invested in 100 different assets. You can kind of just narrow it down to a few different verticals and then be very selective within those verticals. So I love Brad's sentiment here. I share it very, very closely. And I hope over time, some of you guys, continue to mature with your education and find the interest in the fundamental side of what we're actually doing here with DLT and not just here for price for today.
All right, Maddie, it's time to red pill all these guys. A lot of these guys are blue pilled. They think TA is bullshit. We've had people in the past, specifically maybe some NFT guys, that said TA is bullshit. And, I had to come back to Maddie and say, hey, let's never talk to these people again, because these people don't know what they're talking about. Because Maddie's about to show you. He's about to really give it to you right now. He's about to show you what Bitcoin has done over the past cycles and, since inception. But what Maddie's going to show you right now is going to change your mind forever about technical analysis, but maybe about this asset class in general, because a lot of people look at this asset class as young, and people need to be in an asset, or they need to see an asset class around for 100 years, but they miss out on the point. And the point is we're investing in crypto because we foresee it as a great asset, something that can connect, efficientize, that can transform the world or integrate with our current system, with many cryptocurrencies like XRP. I feel like we've been talking about XRP a lot today, but it's good. It's good. I told you guys it would come soon. We'd come, start talking about XRP more.
Bring it back.
But that's what I want you guys to gain out of this. So Maddie, give them the red pill here.
Cool. So I'm not going to exhaustively explain what Fibonacci's are and how the sequence works. You guys can go watch. There's a million 5-minute YouTube videos that explain, how Fibonacci sequence works, how it's found in nature, yada, yada. You basically are just adding the previous two numbers in the sequence to get the next number in the sequence. And then the deeper we get into the sequence, anytime we divide any of those two numbers out by the previous number, we get closer to 5, which is 0.618. It is the golden ratio. And like I said, it's how a lot of things grow within nature. And we see these patterns through a variety of different things. And they, interestingly enough, translate to charts. And they translate to charts not just in current time, not just in crypto, but we've seen them also translate onto things like the Dow Jones, which has been around for over 100 years now, right? We can see it on a variety of different markets. So one of the things that we do is we can always look at old ranges. So we can, of course, come back to some of this crazy price history from 2009. It's not very liquid, though. There wasn't as much, changing of hands here. This is a big reason, too. And I know I'm not going to get on a tangent about this, but we've talked about market makers in the past. People think that market makers are inherently evil and, we don't really need them, and we can just do business as needed. You see all these gaps in here. You see all these nonsensical candles that don't really have a lot of volume to them. That's what happens when it's just peer-to-peer. When you don't have a liquid market maker in the middle, you get very messy and ugly charts with this. Over time, what happens? More and more exchanges come online and we have more liquidity available. So we pick Fibonacci's. We need to select a range. We can use them inversely, but we can also use them from a top-down approach. So we're going to be talking about how to use them to find targets. You can also use them to find retrace levels. So areas where we might have a difficult time breaking above. If you believe we're in bear market territory, this might be an area where price might turn over. So Specifically talking about extensions though, the first big crashing structure we have comes back here in 2011. We don't really have a lot of examples of multiple candles showing a decent sized correction. So the first one here is in 2011. If we grab our Fibonacci and we go swing high, swing low, yours won't look like this. Mine is custom. If you guys want yours to look like mine, we have a tutorial on the website. Very, very clean and easy to use here. What we can see is that over time, we reach out to these extensions. So we talked about when you divide out, you get these fractions, right? So you can see the 0.618, meaning that from the top of the range here, so from the top at $31.81 to the low at $2.70. If we were to walk it back, we would see we'd be retracing 61.8% of the way. So all we're doing is moving the decimal here, team, just like you did in grade school, moving the decimal over 2 places, and that's where you get the percentage, right? So 0.618 equals 61.8. That's an area where we can sometimes see price turnover. Of course, if we were to use the fib inversely, we could potentially use that as an area of support to find an entry. But in this particular instance, again, we're going swing high, swing low. We're looking for targets. So the extensions do the opposite, right? So instead of dividing, we're adding a 1, 2, 3, and 4 in front of them, right? Of course, we get to a different number here at the 4.236. But what we're doing is we're just multiplying instead of dividing. So what we look for in extensions, and this is really how I find a lot of my targets for what we put in the coin library, is I use the 1.618, the 2.618, and then I use this pocket up here between the 3.618 and the 4.236 as my targets. Now I'm going to layer out not just at one price here, I'm going to layer out in chunks. But what we can see here on the Bitcoin chart is that we actually reached a 4.236, closed lots of candles in and around this area, pulling back a little bit before breaking higher. If we continue to use, again, just the same range here from 2011, you guys can see that we use the 34 extension as heavy resistance back here in 2013. Again, these Fibonacci's would have printed exactly this way, regardless of these candles actually being present or not. All you needed to see was these candles here, and this would have printed exactly the same. As we progress, we can see that the 8 extension was used as support, and as time progresses even further, we reach out beyond a 377 extension, using the 233 at some point in the future, using the 377 again as resistance. Again, I can have these sequences go even further, but it's not necessary for my everyday charting, right? Of course, we can see that we've exceeded these now. Well, what can we do now that we've exceeded these? I can either add more extensions to see where they're going to go further, or I can go to that next crashing range. So let's go to this next crashing range we have here. So we have 2014 through 2015. Go ahead and grab the swing high. We're going to grab the swing low in here. So of course, we crash through these, we work our way through a lot of these retrace levels, and we work our way up into some serious extensions. You can see that over here, we almost reached out to the 21 extension back in December of 2017, using the previous 4.236, 3.618 as support back here in 2019. Heavy rejection off the 13, pulling back again into that same region in 2020. And look at that, double topping off the 55 extension over here in 2021. So again, how are we getting these numbers? 8 plus 13 is 21. 13 plus 21 is 34. 34 plus 21 is 55, right? It's very, very simple. So if you guys wanted to add additional extensions, all you'd have to do is add 233 and 377 together, and you'd be able to add the next extension if you wanted to. Last one we're going to look at here is if we go from, or we're going to look at, I guess, one more other than that. So we'll go from the 2018 cycle. You guys can see that we reached almost out to a 4.236, 3.618 ended up being the top in there. And we are currently at a perfect 4.236 as of current, which is at 73,478. So all the way back here using the 2017 cycle high, cycle low, back here from 2018 low, you guys can see that it basically called this out over long periods of time. So where do you guys think people are getting their multi-$100,000 targets from right now? So if we go from the most recent cycle, which is what I use for most of my targets, right? So I'll look at the last cycle high, cycle low, because it's the most prevalent data that we can have for more short-term analysis. If we go from the current swing high to the swing low in here, you can see that, of course, we have broken over all retracement levels. And where are we working to next? The 1.618 puts us a little over $100,000, 101,998. We'll call it 102,000, right? So this is where people get that number from a lot of the time. You can see all the way up here at a full extension, right, which we did see just reach now from the 2018 cycle high, cycle low. We're right around $240,000, $250,000. And this would be a full extension up here, right? Now, you see people calling for $1 million and more. That would be us reaching a 21 extension, which generally is not reached in a single cycle. Now, can it be reached over multiple cycles? Absolutely. But again, this is why when I pull out these charts, I do it all the exact same way. And what do I have to do? I have to measure and see where the ROI is, right? Even let's say you were buying the middle of the zone here at 20K and you were getting out at this first extension, you're getting roughly a 4X out of this opportunity, which is good. But when you put it up at alts buying the same exact range, this is what a retrace looks like for them, right? This is what retracing 23% is, or 50% is, or 61% is. If we were to reach all the way out here to $250,000, and let's say that you had bought the low in here, all the way to $250,000, right? You're getting a little over a 10x opportunity out of this, which again, compared to alts, is really, really sad. If you were to buy Bitcoin right now, again, this is a great example of not being blinded by price. You buy Bitcoin right now at $72,000. We get up to $100,000. You're getting a whopping 40% back on your money. Now, again, when you compare it to Dow Jones performance, knocks it out of the park by double, right? You're going to get about 20-25% of the Dow Jones on a really good year. But when you look at where we are up to target one for Bitcoin, you guys can tell me this is different with ETFs. I heard it last cycle too. I heard institutional money was coming last time. We were going to 250K by December. What happened, right? Like cycles take time. And the more and more money that comes into this market, the more time it takes to mature, right? So when you have Bitcoin up here at multiple $1 trillion, in order to double it, you need another 2, 3, 5, 10 trillion to pour in order for that to happen, right? And then you have to consider other things like global GDP and other assets that already have large market caps. How much needs to be siphoned out of that, or just total GDP grow, and we're able to accommodate that. Some of the targets out there are based on such severe speculation and requires like half of world GDP to go into Bitcoin in order to achieve some of these prices in like a single cycle. So please, guys, just relax, understand that there is a lot of money that's going to pour in over time, but just because you're invested in this cycle and you want to make money this time doesn't mean that you're going to get to your target guaranteed, right? Which again, why we have this approach even with the altcoins is that we layer out. First target, I am guaranteed taking all the money I put into it, and that's coming back to me. Plus, I'm taking an initial profit. So that's going to be between 30 and 50% at target one. And then we have additional targets above that. Too many of you guys look at that top target and go, I'm not selling a damn thing until I'm up there. I'm not going to be the schleb. I'm not going to be the paper hands. But if you've been diligent through the bear market and building a position and you're up 10, 15, 20x and you're at target one, right? Why would you not be de-risking? Why would you not be taking chips off the table, right? I know we were supposed to look at some other assets. I know that we've gone pretty heavily on today's time, but I definitely wanted you guys to just see the power of these fibs over time. This is where a lot of my targets come from. And again, everything's about ROI for me. I care less about what this number on the screen on the right says, whether it's a fraction of a penny or if it's hundreds of thousands of dollars. I need to consider ROI and then how much money is actually need to come into that market in order to bring us to these prices. So I hope you guys take the same objective approach. I want you guys to do well. I want you guys to be successful. I'm not here to bash on Bitcoin. I'm here to just tell you guys that Bitcoin is not the best ROI right now. Most of the Bitcoin boat has sailed in relations to best ROI in crypto.
I like that, Matty. You guys saw it yourselves, you know, to that 34 Fibonacci or that 55 Fibonacci, taking those ranges from 2013 and 2015 and looking deep into the future. So I think that was a pretty big moment for me, and I hope you guys got something out of that because we do a lot of that on the show every Friday. Matty, what do? You play something in the Discord and people drop their charts, and then Matty will
we do technical tune-up Friday. Yeah, so we do a chart request. Everyone puts them in there through the week, and then we chart all member requests on Friday. So if you guys want to be a part of that, I do technical analysis on just about anything, stocks, crypto, metals, otherwise. Even if it's something that I personally wouldn't invest in, I'll still give you guys the technical setup. So if you want to get invested, you can make the decision for yourself. Because again, that's our goal here at Crypto Charge, is to empower you guys to be self-sufficient investors, not to make decisions for you.
I love that, Matty. Team, if you have any questions from today, we're going to be getting a little bit more deeper on the Ask Matty show this Wednesday, 2:30 p.m. Pacific. Make sure you guys join us then. But if you have any questions, make sure you leave them in the comment section down below. And if you want us to react to anything, you guys have sent videos in the past, hey, react to this. And they've been videos not worthy of reacting to, but if some genuine and something good, like a hot take or something, leave them in the comment section down below. Say react to this, then leave the link. And maybe, just maybe, no promises, I might pull it up. But team, until Wednesday, we will see you then. Bye.